Hey everyone, Brian from Bearable Traders. Wednesday, January 6th. Incredible day in Washington and in the markets. So, yeah, it was a strange day. It started out very strange. IWM opening up at about 1.7% up on the day. All the other indexes, or two of the other indexes, SPY and Qs, were in the red, well in the red, but IWM, the small caps, up a lot. And of course, I really think that it's just a reflection of the feeling there's going to be a lot more stimulus coming down the pipe, and also maybe some possible little bit of trouble for the technology sector with additional regulations. So there was a rotation of money out of maybe the tech sector and into the IWM, which would be the small caps big beneficiaries of any kind of large stimulus that might be coming out of Washington in the next month or two. So that's why we saw the markets rip higher today, and even the SPY joined in after starting out in the red. But again, IWM, the big beneficiary today. We'll take a look here at the indexes quickly. Start out with the transports. You can see here we're just holding the 50. And of course, we gapped up this morning and just ripped higher from there. Not great volume, but again, all the indicators pointing upward, and looks like we're going to head higher here. Odds favor the bulls. So here's something interesting. There were a couple interesting things today, other than the fireworks in Washington. There was a break out of the yields on the 10-year Treasury. And you heard me talk about this repeatedly, that this was basically still in an uptrend. We were forming a bit of a ascending triangle here. And today we broke out on yields, which meant bond prices obviously headed lower. But you can see here we're through that 1% in a very decisive way. And I think we're probably going to head higher. There'll probably be some churning like this type of action, but it looks like we are definitely breaking out, going higher on the yields. And as always, this is a good indicator for and of course beneficiaries are the banks and the financials, the lenders, and especially the regionals, which I took a position in KRE today, which is a regional bank ETF. Talk about that a little later. But you can see here, yields making a decisive break here and getting out. At some point, if yields continue to go higher, this is going to be a problem for the market. Last time we got up to around 2%. The market really didn't like it too much. I don't know if that number has come down since then, and I believe it probably has. And where it is, I'm not really sure. But at some point, if we start getting up to 1.5, 1.7%, I think the markets aren't going to take that very well, but we've got a long way to go here. And the Dow again started a little bit in the red, but had a strong day, finished an all-time high, and pulled back a little bit at the end of the day as there were some problems in Washington, but overall a pretty good day. Volume was pretty strong. RSI turning up here. And of course IWM, this was the one that gapped up strong at the open and just continued higher from there throughout the day, and did so on volume. And we had been getting a pullback after this nice run, and now we've had a nice pop up, and you can see here stochastics turning up again, RSI actually getting up over in the overbought territory. So maybe a time for a little bit of a consolidation before we head higher, but definitely the benefits of any stimulus. And I mentioned, of course, the Qs. We did gap down at the open. We tried to rally during the day, and that rally faded, and we went out almost where we came in at the end of the day. Look at the stochastics here rolling over, MACD rolling over, RSI heading lower. The Qs do not look particularly healthy at this point. Money rotating out of that. So you can see here the SPY, we actually broke to an all-time high but couldn't hold it, so we pulled back. We're still holding this 20 moving average here. Volume was pretty decent today. Stochastics a little bit concerning, still heading lower. So I'm not sure if this is going to continue to just churn sideways here. But we did be watching this 20 moving average to make sure to see if it continues to hold here. This was the other big story of the day in my mind for the markets, the dollar. So we gapped up at the open. Looked like we were going to start to push higher. It kind of thought maybe we're going to hold this level here. But the dollar weakened throughout the day, maybe with some of the concerns of what was happening in Washington. But you can see here the dollar really sold off to a new low on this downward trend line. And stochastics, again, getting are really in the oversold category. RSI getting down to oversold. But dollar still firmly in a downtrend. And of course, that's good for emerging markets and commodities, materials. And materials had a very strong day today. The VIX pulled back, but considering we had a pretty strong up day in a couple of the indexes, I would have expected a bit more of a pullback here. So more volatility ahead, maybe. And the TLT, you can see a huge gap down on that bump in the yield. And that's pretty predictable. Again, looks like we are going to head lower, which means bond yields, treasury yields going higher. So let's quickly look at the sectors at a glance. Discretionary went out, new all-time high, pulled back significantly from the day's high, but still new high for the discretionaries. I think I heard Tiffany had a really good report. Lots of people buying jewelry during a pandemic, I guess. Why not? Got to spend your money on something. So the communications obviously gapped down, came back pretty strongly, and still managed to go out red on the day, but not anywhere near as bad as the technology sector, the XLK, which again popped up and couldn't hold its gains and actually dropped. Went out below where we came in at. Industrials, strong day. Here's the materials, very strong day on a weak dollar. Energy had a pretty good day. Again, sort of a recovery trade play, probably going higher. Healthcare, huge outside day today. Started out gap down, really ripped higher. And not really sure what that was all about, but you can see that, and the XLF financials had a really good day today. And of course, that was with the rising yield prices. So here, just a couple of stocks I took an interest in this week and today. X, of course, anything to do with recovery, infrastructure build, like Vulcan Materials, Nucor. X is one I've traded before, traded it back here, waited for this pullback, and now we had a really nice move today, so I'm in that again. The banks, I think I'm just playing for rising yield, so it had a really nice day today, so I'm in this KRE, which is the regional bank ETF. Again, nice strong day today. This all the indicators look like strong and will continue to be strong. So holding some of that as well as some of the other trades. We'll talk a little bit about the some of the GoldSilver PAAS. Again, today had a gap down. We've had this monster move higher. I was expecting a pullback here, and definitely got it. But you can see here we had a nice rally back at the end of the day, and still holding on to that. And the GDX, of course, sort of same story. Nice pop up. It's a huge gap up, and now we've had some consolidation here. I think we've got a lot of room to run here on the GDX. And if you want to get even more bang for your buck, you can use the miners, the junior miners. So this is the ETF for the junior miners. So let's take a quick look at where we are right now. Again, it looks like we're going to have another green opening. Things can change from now till the morning, but we've got the Dow looking like it's going to open up over 100 points. S&P up a little. The NASDAQ looks like it may bounce back a little here. Russell might be taking a breather after that huge move yesterday. And oil looking up a bit. Natural gas, gold, silver, all trending higher in the futures markets. So, yeah, everything's still going to be green. So long and strong. So anyway, this is my book on Amazon, How to Swing Trade, if you haven't checked it out. And of course, as always, we will be in the Bear Bull Trading Room live on YouTube, 8:30 in the morning. And you can check us out there. And then for the members, we will be trading the market at open at 9:30, building our watch list and going from there. So hopefully we'll see you in the morning. Have a great rest of the evening, everybody. And ciao for now.